Today on Fear and Greed, hopes for a rate cut anytime in the next 6 months fade. Wine exports to China are booming. And finally, some good news on home and car insurance premiums. All this plus a great story about Chanel's first foray into sports marketing. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Wednesday, the 23rd of October 2024. I'm Michael Thompson and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, professional investors are pushing out the timing of an interest rate cut in Australia towards the middle of next year, hitting the local share market.
Yes, now, very exciting news on this story, Michael. It's all about bond yields. I know how much you love bond yields. Yes?
I have warmed to them. Over time, you have educated me in the importance of them, and now I'm all ears.
As you know, bond yields reflect what big investors think is going to happen to interest rates. And it isn't great news for those wanting a rate cut. A little over a month ago, big investors had priced in a rate cut sometime this year. Now, bond yields have risen. That suggests that the first cut in rates is now most likely May next year. That is a big shift in the past few weeks. There's a sense that the Australian economy just isn't slowing enough to get inflation down to the Reserve Bank's preferred 2 to 3% target. Also, US investors think that that economy is much better than they thought it might be. They think that rate cuts there will take longer to flow through. That's pushed into the Australian market. The view just is that the Reserve Bank will have to keep rates higher for longer, and bond yields, professional investors are putting money where their thoughts are, and that's why it's such a good predictor of what's going to actually happen. It's been 4 years since the Reserve Bank last cut interest rates. That was the COVID years, of course. We're still trading around 12-year highs. We would all love a rate cut, but as Michelle Bullock, the Reserve Bank governor, keeps saying, keeping rates higher for longer is much better than not being able to get inflation down.
All right, so there's plenty going on clearly in the bond market. What does it then mean for the share market, Sean?
Well, there was a really big sell-off yesterday. The market fell by nearly 2%, finished at just over 8,200 points. 80% of companies of the top 200 fell. Sea of red, Michael. Sea of red, I would say. Don't look at me like that. Don't look at me like that.
No, it's either a sea of red or it's there are green shoots or something. It's just you use such colourful language in describing the market.
Colourful.
You are made for podcasting. It's theatre of the mind, Sean.
Excellent. Now, the reason why was it the big sell-off? Well, these concerns on interest rates are really flowing through to equities. Of course, the market was at an all-time high late last week. And so to have this sell-off today is kind of, it's not remarkable, but it's a bit surprising that it's sold down so hard. People are worried about consumer spending slowing. People are worried about business investment slowing. Some of the large caps really tumbled yesterday. They were down between 2 and 3%. Commonwealth Bank, National Australia Bank, Macquarie, Wesfarmers was another one, Goodman, Aristocrat, Leisure. Really those interest rate sensitive sectors, think healthcare, think real estate, think consumer discretionary, financials, they all really were sold off hard yesterday. Not sure what's going to happen today, of course, but the sentiment ain't real positive at the moment for the market.
Yeah, there is a lot going on in markets, and I just love the fact that there I was trying to pay you a compliment, and you just brushed me aside so quickly. It's just like, oh, here I am complimenting you on your language and conveying the importance of these moves in the market. It's like, yes, let me get on with this.
Yes.
Okay, all right, thanks, Sean.
Big story.
Yeah, indeed it was. I shouldn't have interrupted. Now, moving on though, wine exports, Sean, jumped by a third over the year to the end of September, showing the importance, of course, of China as a sales destination.
In fact, exports to China went from $8 million a year ago to $612 million in the most recent year, according to Wine Australia. Now, remember, tariffs were removed in March this year. Exports to China are mostly at premium price points. There was lots of restocking going on, particularly in the May, June months. That helped boost the overall outcomes as they got all the wine onto the shelves. The premium price point means that all the cheaper red wine, Michael, yes, look at those eyes. Yep, you're glowing there, Michael. The cheaper red wine, well, it's less likely to be sold overseas, so plenty for the locals. So if you are more of a cheap red wine drinker, I think you could be pretty happy with not too many price rises over the next little bit.
Yeah, plenty of stuff to mix with Coke.
That's right.
Coca-Cola. Just to clarify, that was Coca-Cola, and I don't do that anyway. Can we just move on, please, Sean?
We can. When you sell the expensive stuff offshore, it means your value jumps. So the actual volumes were only up 7%, but the value was 34% higher. Outside China, export levels are stable at about $1.78 billion over the 12 months to the end of September. It's really the highest level of shipment overall in about 3 years. Penfolds, of course, is the biggest exporter to China, so they will be benefiting very much from this boost in sales to the world's second largest economy.
Yeah, indeed they will. All right, a quick break and we'll be back in a moment with the rest of the day's business news. Sean, Australia will spend $7 billion buying long-range missiles from the US to strengthen its defence capabilities.
Sure will. Defence Industry Minister Patrick Conroy said that the world faces the biggest arms race since World War II. I wonder whether he remembered the 60s. Don't know. Anyway, moving on.
That is a very, very, very good point. We'll investigate that, because that is really the arms race, isn't it? That was really quite something.
Five pigs and things like that. Yeah. Anyway,
Cuban Missile Crisis. Please move on.
A few issues like that. Australia has bought hundreds of US-made long-range weapons for the Navy. They can be fired from the land or from sea, capable of targeting and destroying aircraft or incoming missiles mid-air. Defence spending is definitely a big-ticket budget item. It's expected to hit about $100 billion a year by the end of the decade, which is about double current levels.
Sean, Australia's third largest company, CSL, yesterday said that it had dropped studies or trials on 3 therapies, and US regulators have raised concerns around manufacturing of a new treatment.
That certainly didn't help CSL's share price, which finished down 3% yesterday. Now, the Federal Drug Administration, the FDA, what does it stand for? I'm stumped.
The Food and Drug Administration.
That's it. I said federal and took me off on the wrong path. The Food and Drug Administration.
Barely even noticed.
Yeah. The Food and Drug Administration said it's got concerns around the manufacture of an antibody that CSL is doing. It's supposed to treat severe swelling. That's been now put on hold. There's also 3 drugs which they are dropping any further testing, basically on the back of regulatory scrutiny or just the fact that it'll take a long time to actually come to market. One is a anticoagulant for treatment of trauma. Another is a muscle inflammation treatment. And the third is a treatment targeting kidney transplant recipients. The head of research at CSL basically said, well, when you take risks, these things happen.
Viva Energy has downgraded its outlook on the back of softer retail conditions, lower tobacco sales and higher business costs. And that, Sean, triggered a near 7% drop in its share price yesterday.
It was the worst of the top 200. Now, Viva is a really interesting company. It owns the Geelong Oil Refinery. It licenses the Shell brand. It owns and sells via the Coles Express brand. It recently bought a bunch of convenience stores called On the Run, or OTR, South Australian based. In that industry, in service stations, it's as much about high margin convenience retailing as it is about low margin fuel sales nowadays. While fuel sales are growing slightly, convenience store and quick service restaurant sales turnover was down. It was probably flat except for tobacco sales. What's fascinating here, tobacco sales are really struggling on the back of the growth in illicit tobacco. And so there's this black market going on in that sector. And in some states, particularly South Australia, where Viva recently bought that OTR convenience store outlets, it's really knocking tobacco sales of places like Viva Energy. I had no idea about this massive illicit tobacco trade going on, but apparently it's particularly prevalent at the moment.
Yeah, that is interesting, because I would have thought that if tobacco sales were down at convenience stores and service stations and the like, it would have been for health reasons and people just quitting. But no, it's because they're getting it elsewhere in an illicit market.
Yeah, I mean, that was one of the reasons given by Viva Energy yesterday.
Oh, fascinating. And it's a good timing for your conversation today, your interview that comes up after the show. You're speaking with Jason Wheat, who is the fund manager at Dexus Convenience Retail REIT.
Yes, so Dexus Convenience owns about, I think it's 101 service stations, convenience stores, quick service restaurants. And so if you invest in Dexus, you are investing in those asset classes. And it's a really fascinating chat about the economics of those. Now, obviously, Jason's from the company, so he's talking up Dexus, but just to hear his view on where the potential for those areas are is really, really fascinating.
Yeah, it's a good one. It's coming up after the show. WiseTech Global founder CEO Richard White has settled his legal dispute with Sydney wellness entrepreneur Linda Rogan.
Yeah, so the dispute was over Mr. White trying to bankrupt his former alleged lover. It came to the fore about 10 days ago. Now, it triggered a bunch of other allegations which have been exposed by Nine Media. One of those was the allegation that Mr. White paid millions to privately settle a dispute with another woman he had a sexual relationship with. There were also allegations that he approached female entrepreneurs on social media with offers of professional support that could later shift to crude or suggestive language. Anyway, the original reason that we heard all about this, the dispute with wellness entrepreneur Linda Rogan, has been settled. Yesterday, the company's share price, which has absolutely tumbled up until yesterday, it opened, fell 2%, but then by the end of the day, finished up 3%.
Suncorp held its AGM yesterday, Sean, and there was some good news for once, from the insurer's chief executive, Steve Johnston. Big insurance premium hikes might be over for now.
That's right. Some of the very big hikes in recent years are in the rearview mirror, he said. Inflation, adverse weather, and a fundamental reset in global reinsurance markets had hit profits at insurers, especially home and motor insurers. That led to much higher premiums. This is in recent years. Well, it's not over, but certainly the worst is over. Now, Suncorp said it dealt with around 700,000 natural hazard claims over the past 5 years, 700,000, at a cost of around $9 billion. That's why insurance premiums have risen so steeply. It's meant that the reinsurance industry, so the reinsurers are the guys, the insurers of the insurance companies, or the insurance companies get together, put a policy for reinsurance. That has sort of had to be reset in recent years because of all these natural disasters, and that's a global thing, not just Australia. That seems to be settling down. Certainly, Steve Johnston yesterday said the outlook's more promising. He pushed for more government money for disaster mitigation. He says that there needs to be investment in resilience infrastructure. He also said something pretty sensible. He said people shouldn't build homes where they shouldn't be built. It was the first annual general meeting since the sale of Suncorp's bank to ANZ. Proceeds of the $4.1 billion is likely to go back to shareholders via dividends.
That seems like logic, doesn't it? Don't build your house where you shouldn't build a house.
Yeah.
Good advice. Good advice.
Yeah, I think so.
Now, Sean, in the interest of keeping things moving along at a good pace, if I was to give you, say, 45 seconds to run through a little bit of extra corporate news. There was a lot of corporate news around yesterday.
Yeah.
Can you give us a few headlines? 45 seconds and your time starts now.
Mineral Resources fell another 4% following Monday's 13% loss, following news that Managing Director Chris Ellison allegedly evaded tax for many years. Transurban said average daily traffic was up 1.1% during the September quarter to 2.5 million trips per day on Transurban toll roads. 2.5 million trips per day. Huge. There's growth across markets except Melbourne. Finally, in my final 7 or 8 seconds, property developer Mirvac said it's making solid residential sales in its new Sydney projects, in Brisbane, in Perth. Even Victoria is improving.
Oh, timed to perfection, Sean.
Beautiful.
And now we're moving on to international news, right on schedule. Winning the US election takes money. We know that. But it takes plenty of money, and the numbers are quite staggering. Kamala Harris has pulled in more cash in the past 3 months than Donald Trump has managed over the last year and a half. That is incredible.
Since July 21, when Joe Biden pulled out and Kamala Harris became the nominee, well, the presumptive nominee then, and then the nominee, She's received money from 4.9 million donors. Quite amazing. Trump's received money since January last year from 1.4 million donors. Harris has raised $971 million in that 3 months. Trump, since beginning of last year, $894 million. Big caveat. It doesn't include money from what they call super political action committees, which are treated differently. So Elon Musk has a super PAC. If you include that, Biden and Harris are in front of Trump. That's $1.9 billion to about $1.5 billion. Basically, Trump has had 4 very rich billionaires, including Elon Musk, providing him with a lot of money through these super PACs, much fewer donations, and Kamala Harris has just had huge amounts of money coming into her. Less than 2 weeks to go. In fact, Michael, this time we'll be in the middle of it this time, 2 weeks, US time, won't it? Wednesday morning, we'll be watching, glued to the TV.
Oh, it's going to be very exciting.
Oh, it is very exciting.
I think you and I will both be watching that. The rolling coverage will be something else altogether. Dow Jones and the New York Post, owned by Rupert Murdoch's News Corp, have accused AI startup Perplexity of a scheme to rip off their journalism.
It's going to be very interesting, this one. The publisher alleges the AI startup was engaging in a massive amount of illegal copying of their work, according to a story in the Financial Times. It claims News Corp claims Perplexity is diverting customers and critical revenues away from news publishers and free riding on the valuable content of the publishers produce. Perplexity's search engine allows users to get instant answers, but the allegation is that the answer engine, Perplexity's answer engine, copies and relies on a massive scale from copyrighted news content analysis and opinion. This looks like a very, very big test case on AI.
Yeah, definitely one to watch. Finally, Sean, I mentioned this one at the top of the show. It seems that in sport, nothing is not for sale. Chanel has bought the rights to the annual boat race between Oxford and Cambridge in the fashion house's first push into sports sponsorship. I don't think I ever would have expected this.
Well, the race will be called the Chanel J12 boat race. J12 being a Chanel watch. You know, when you're going to pay like $3,000 or $4,000 for a watch, is that like a timepiece? Is that when they become timepieces rather than watches?
Yeah, that's right. It moves past being a watch and becomes an heirloom then.
Yeah, okay. So the the Chanel J12 boat race. Don't know how much it's worth, though I must say the main sponsorship previously was from a crypto exchange called Gemini, the main sponsorship of the annual boat race, the Oxford-Cambridge boat race. So, Chanel is probably more appropriate, I think. Of course, the boat race is a spring race on the Thames. It has about 250,000 spectators lining the river there, 4-mile course through West London. It's been running for almost 200 years. It's first held in 1829. Women joined in 1929. But I think just as interesting is that Chanel has never sponsored sport. You often see timepieces sponsoring the Australian Open and places like that. Chanel's never gone there. They're more kind of Margot Robbie, Penelope Cruz style sponsors, I think. Anyway, they're jumping into the water, so to speak, Michael.
Oh, I think it's a great story. That's a good way to finish off today, Sean. Up next is the Fear and Greed Daily interview with Jason Wheat from Dexus Convenience Retail. REIT is your guest. Also today, the Fear and Greed newsletter is coming out. Head along to fearandgreed.com.au and sign up if you haven't already. And there's a new episode of How Do They Afford That, our sister podcast, all about making your money work harder for you. Thank you very much, Sean.
Thank you, Michael.
It's Wednesday, the 23rd of October, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.